As traders, our goal is not to make the most amount of money possible in the markets. Our goal is to manage our risk and stay in the game for as long as possible. Most people think that being a trader is making millions of dollars per day, but that is not the case. Being a trader is doing our best to lose the least amount of money as possible to potentially make the most amount of money as possible. Now, to do that, we must learn to manage our risk in trades. And in today's video, I'll be explaining some risk management rules that you need to know to become a profitable trader and stay in the game for the long run. You know, let me open up a Word document for you guys and write all these down. Hold up, let me open up Paint as well. I'm about to be a teacher, okay? Class is in session and there's gonna be no students talking in the back, all right? All right, rule number 1, never risk more than 3% of your portfolio in a position. This number can change depending on your trading personality. If you're more aggressive and want to put on more risk, you can increase this number, but I wouldn't recommend risking over around like 5%. And if you're less aggressive with your style, you can decrease this number. Now you might be thinking, okay, don't put 3% of my portfolio in a trade. Got it. That's not what I'm saying. I'm saying don't risk more than 3% of your portfolio in a trade. You can put 10% of your portfolio, even 15, right? But your risk should always be the same and it should never be more than 3% of your portfolio. All right, let's say we want to enter a position and our account value is $10,000. The stop loss on this position is going to be minus 10%, okay? So we know that we have a $10,000 account and we can only risk 3% of this number, all right? And 3% of this number should equal negative 10% on our position. So 3% of 10,000 is $300. $300 should be minus 10%, which is, doing quick maths, we know that we can put in $3,000 into our position with the stop loss of minus 10%, risking only 3% of our total account value, right? So this follows all our rules. We can take this trade. Now let's say we're taking a super risky position and we're gonna place our stop loss at minus 50%, which is yikers, okay? But still, minus 50% is our stop loss, okay? So we know $300 is gonna be our risk. We know by doing quick maths that minus 50% of this, which would be $600 of the total value of that trade, all right? So you can see that we're putting in different amounts per trade, but our risk is always the same. Our risk should always be the same and we should be focusing on risk to reward. All right, rule number 2, have a take profit and a stop loss set on the chart before even entering your position. And if you can't find one, don't take the position. I've seen a lot of people enter positions without even knowing their risk, and then they go on to ask why their account is blown up, and I'm just looking at them like, are you dead ass right now? Like, you dead ass right now. If you don't know what your take profit and your stop loss is before entering the position, why are you even entering? At that point, you're just gambling, hoping to make some money. Now, this goes on to the next point. Respect your take profit and stop loss. Let me know if this scenario seems familiar, all right? So this line is your average price on a trade, okay? So price is moving, you enter, okay? And then you place your stop loss at this level right here. So let me make it red, all right? So this is your stop loss, and then your take profit is all the way up here, okay? So price is moving, and now you're red, okay? Price is coming, it's very close to your stop loss. Price is very close to the stop loss right here. And you're thinking to yourself, if I'm gonna get stopped out of this position, I might as well get stopped for a smaller amount than my intended loss, right? So you exit the position right here and your stop doesn't hit. You exit the position before it even hits your stop loss right here, and then while the market's moving and you're out of your position, price goes on to reverse and hits your take profit. I know this scenario sounds familiar because this has happened to me multiple times, okay? I've done this way too many times. I'm very guilty of this. Another scenario is that you're in a trade, and let's say price is 2 to 1 R, all right? So this is 2 to 1 risk to reward. Okay, you look back at your previous trades and they're all losers, and this is the first trade you're green on in a while, right? You're like, hey, I'm already up 2R, but your initial plan is a 4 to 1 risk reward. Right now you're up 2 to 1, right? And you're thinking to yourself, I might as well take this win because I barely get any wins, you feel me? You take profits quickly to recoup some of the losses that you took from previous trades, but price then goes on to hit your TP for a 4-to-1 risk to reward when you preemptively got out at 2-to-1. You would have gone out for a 4-to-1 risk to reward on this trade and would have likely been green after all the previous losses that you took, but you decided to take your 2-to-1 risk to reward when it didn't even follow your plan. The icing on top of the cake is that for your particular strategy to be profitable, you need a 4-to-1 risk to reward. So you taking a 2-to-1, you're not profitable yet. But if you did take this 4-to-1, you would have been profitable. Both of these scenarios have happened to me multiple times, so believe me when I say this, respect your take profit and your stop loss. All right, number 4, have a loss limit set per day. The reason I'm saying this is when you're losing money, you tend to be more emotional than expected. You will 100% be more emotional when your account is down compared to when your account is up, all right? To combat that, I would say have a loss limit set per day, and once that limit hits, step away no matter what the market conditions are and come back tomorrow. It doesn't matter if it's the perfect market conditions for your strategy, step away from the markets and come back tomorrow. Why? Because there's always tomorrow. There's always another day in the markets. Hold up, let me zoom in for you guys. My bad. All right, I know it might have been hard to see that. So, number 5. Don't let the emotions of a previous trade affect the trade you are currently in or about to take. Losing money is never fun. No one wants to do that. There might be instances that you recall when you take a losing trade and then another setup is presented right in front of you, but you don't take that setup because your previous few trades didn't do so well. You might not take the trade, or you might shift your strategy because you took a loss on the past few trades. Let's say you have an initial stop loss of 10 points on ES, for example, right? And because you took losses on your last few trades, you decide to move your stop loss up to 5 points instead of 10 points, right? Price is moving, you get filled, you get wicked out, and then price goes on to hit your TP, right? But if you just respected your initial stop loss at 10 points, you wouldn't have gotten wicked out on this position. You would have had a winning trade if you stuck with your original plan, but you decided to shift it because of your emotions relative to your previous trades. Don't let emotions of a previous trade dictate how a future trade will perform. Number 6, when you're up a certain amount on a trade, move your stop loss to break even. When I say you're up a certain amount on a trade, I do not mean the dollar value. Dollar value is insignificant. I mean the value of the option, equity, future, Forex, whatever position you're currently in. So let's say your risk is 10 points on ES to make 30 points, right? This is 30, this is 10. Let's say ES is moving and we're at the halfway point, 15 points, right? So right here is 15 points. You now move your stop loss to break even or above break even, so you exit green on this trade, but let's just say break even. And now you're risk free on this trade. You're halfway to your TP, so placing a stop loss at break even will guarantee you not losing any money on this trade, in turn making you less emotional on this position. Now, the move that needs to happen before you move your stop loss to break even is entirely dependent on you. I personally like moving my stop loss to break even when I'm up around like 10 or 15 points on ES, for example, because if price does come back down to my entry and hits my stop loss, my thesis would be invalidated, and being in a position where your thesis is invalidated isn't something you should be doing. Number 7, if you are too emotional on a trade, you are sized too heavy. The main obstacle when it comes to trading is our emotions. We might have a strategy that we tested works, but when we perform and trade using real money, it's entirely different. Why is that? Our emotions. Our goal is to be emotionless when it comes to the market. So if you find yourself too emotional than normal on a trade, you are likely sized too heavy and you should be in a smaller position. Size accordingly to your emotional limit and your account size. That goes back to rule number 1. Never risk more than 3% of your portfolio in a position. If you're being too emotional on a trade where you're risking only 2.5% of your portfolio, then you're in too heavy. You should size lower to your emotional limit. That's a huge thing too, sizing according to your emotional limit, because not a lot of people talk about that, right? People talk about set values and how much of your portfolio you should risk, but let's say your emotional limit can't handle that set value that you should risk on your portfolio, then you should be risking less than that. So you can build up that emotional limit, to the point you're able to risk 3% and you're able to be emotionless when you're in this trade. Rule number 8, like the video. All right. With all that being said, thank you so much for watching this video. If you learned something new, I'd greatly appreciate it if you left a like. Subscribe if you're new and you're trying to learn and become the best trader you can possibly be. Leave a comment down below on things you might be interested in watching, and if you have any questions, let me know, and I'll see y'all in the next one.